Robyn Grew, who helps lead the Man Group. Great to see you here on the Milken stage in LA.
Thanks for having me.
Volatility in this market. If you're a broker-dealer, probably good for you. If you're a hedge fund manager, not so much.
Well, listen, volatility is a place where we need to lean in to do more. We are in volatile markets. We're not going back to a benign market environment. And so in that space, we have to be prepared to create diversified content and capability that's able to navigate these markets to provide outsized returns or alpha returns to our investors.
How do you do that, though? Because when you look at the strategies that Man Group has, a lot of systematic strategies, a lot of trend-following strategies that we've seen over the last few weeks and months does not necessarily perform optimally when there is so much misdirection going on in the market.
Totally, and they're not supposed to. I think that's the thing that we need to be mindful of. In a diversified portfolio, you're going to have assets and capabilities and strategies that do perform, and we've seen that in credit, both public and private. We've seen it in great active equity management. We've seen it in multi-strat. But you don't see it in trend because that whipsawing, whiplashing behavior doesn't work for it. But that's why when clients are talking to us about how do they position their portfolios, they're looking at the things that will operate in markets as we're seeing today, and they're also thinking about defensive alpha. And what we do know, and what we've had history around, is that when you have decades of experience in momentum and trend strategies, they operate well when this volatility slows down, and then you can find the trends again.
Do you expect that volatility to slow down anytime soon?
I think that volatility is going to be here for some time. It's whether the volatility is accompanied by whiplash behavior. And that's what the markets are looking for. We're looking for that consistency, something that is predictable and capable of being predicted. But there's no doubt that the opportunity set across markets, across jurisdictions, are really interesting right now. 100 days ago, you might not have thought about Europe as a growth opportunity. Today we sit here talking about that. We're looking at Asia with a very different set of lenses. We're seeing real opportunities for active and alternative investments. And it's about staying calm through this time as well. But volatility, will it be here for some time? I think so. Dispersion? Yep, I think so. But whiplash? Let's hope not forever.
I don't know if you got a chance to hear what Scott Bessent had to say a little bit earlier at one of the Milken panels here. But there was a really interesting moment in that where he really turned to the audience and looked straight at them and said, we're trying to make everything more appealing for you, meaning for the investors out there that are in this room. Do you find any comfort in hearing those words out of Scott Bessent?
Absolutely. You know, we want this biggest, deepest capital market to function really, really well. We just also put to work by our clients to go and seek out alpha wherever that may be, that outperformance across all markets. That's why we trade 800 plus markets in the world. That's our job to do that. And we do that for real individuals who have saved all their lives, who have put into their pension pots, be it their 401ks or their IRAs or the equivalents elsewhere in the world. But yes, I think it's a tremendous statement that we have Scott Bessent talking to us about actually being supportive of markets. I think that's a great thing.
Is that too little too late? This is a room full of people from around the world. And you know there's been a reallocation of capital, or at least a rethink of whether to reallocate capital away from the US to Europe, for example, or even to other parts of the world.
Too little, too late? I don't think so. I think we all look to the quality of the US as an investable space. And again, it's the opportunity set that's out there. Is it a bad thing that there's competition? Is this a bad thing that there's growth in Europe or an opportunity set in Asia that's opening up? I don't think so. In the same way as I don't think it's a bad thing that we're seeing the opportunities in private credit open up. So I think there's plenty for us to keep our very detailed focus on. But no, I don't think it's too little too late.
How do you keep your team, the folks who work under you, not just motivated, but to get them to understand what the long-term goal is in an environment where we are so focused on these minute-by-minute, short-term disruptions?
It's a great question. I think the reality is you have to be You have to have confidence in the strategies you're running. And you have to know that those strategies are performing the way they should do in the market environments you're in. So you keep that focus. At Man Group, if we have strategies that aren't working in a period of time, I don't have to go onto the floor and make people feel more unhappy. They're doing that themselves. So for what we do, it's about being sure that we're doing the best we can do. We continue to be at the cutting edge, entrepreneurially, of content and product and capability, that we deliver that to our clients, that we deliver more than just funds or products even to clients, that we're delivering the decades of experience we have in AI or technology, or we're delivering the nearly 20 years of experience we have in our partnership with the Oxford Milken Institute at Oxford University. It's about keeping people focused on the day job. It's about staying calm.
You mentioned AI, and of course, Man Group is probably one of the early adopters, at least in the finance space, of AI. And I think we spoke about this at Bloomberg Invest a few months ago. Does that become more critical in times like this, having those types of capabilities, or is it potentially a liability? Because you're effectively talking about, I don't know, something that's, I don't want to say it's predetermined, but certainly there's a roadmap that's put out when it comes to these models.
Listen, I think AI is a tool. We talked about it before. It is a great capability. When I think about generative AI, when I think about AI agents, it's about deploying those. It means we can be better, faster, smarter. It doesn't replace the human being, and it doesn't mean that you need to ignore the risks that are incumbent in these capabilities too. But I think that tech is part and parcel of what the future looks like. Undoubtedly. AI part of that? Undoubtedly. You don't have to look very far in this conference or the meetings we had with Elon Musk yesterday to see just the power and the capability of these future technologies.
And you think the investment in that writ large, not just at Man Group, investment in that AI tech, that hasn't been disrupted at all? There hasn't been a rethink on that longer term investment opportunity?
Not for us. We continue to think that AI, and we continue to think that this is both being consumed within Man Group and within the work that we do, but the broader reach out into other industries and other spaces is going to be, I think, transformational.
You've been on the job for a while now, so you're not new, you're more of a veteran now. And you're a veteran at a time where this has to be one of the more challenging times to be a corporate leader, certainly of a financial company. And I am curious as to what you want to do to grow Man Group, knowing that the world order that you came into, if not over, is certainly being reshaped.
I think listen, it's a privilege to sit in the seats we do, and I've been talking to clients non-stop really for the last 100 days or so. And that privilege is something we shouldn't forget. Mm-hmm. You get a front row seat into what's happening in the world doing the jobs we do. And so my job, how has it changed in the last 100 days? It hasn't really. It's still about doing the right thing by clients. It's still about sticking to the strategy we have. It's still about creating diversified, orthogonal, uncorrelated content so our clients can benefit and can return value to their underlying savers and pensioners.